That's the money market. Uh, I would like us to wait 3 minutes and come on board. Let's wait 3 minutes. All right, so good morning once again. Uh, my name is Don Gale. I'll be taking you on this analysis. You can hear me clearly. Type a yes. My volume or my audio is clear. Type a yes. All right, thank you so much. So we'll be starting off our analysis by looking at fundamentals. So we'll quickly go over to quickly go over to Forex Factory. All right, so greetings to everyone once again. Yes, I can see a lot of you dropping where you're tuning in. We have clients, we have listeners from Sabah, from Abuja. That's good. All right, so let's quickly move over to the Forex Factory so we can start. We are already behind time. So I'll be sharing my screen, Forex Factory. All right, so if you have noticed, you would observe that this week is a less volatile week. So we don't have much on the table this particular week. It's like the market wants to. So this week is a week where the market is beating. Also note that the last week of the month, so we are not expecting much, and that is why, apart from a few instruments, majority of the currencies or instruments have just been ranging. No much volatility in the markets. That is because fundamentals are the reasons why the markets are volatile. So for today being Wednesday, you can see clearly that we do not have any high impact. In fact, for this week, I haven't had any reasonable high impact news. Apart from Friday, that we would have the PC. Since we are not analyzing on Friday, we are sticking to Wednesday. Earlier this morning, we had the CPI on the Australian dollar, and it turned out to be positive. Well, it was expected. But among the central banks, the AUD, that is the Reserve Bank of Australia, are the only ones who have hinted and likely to hold interest rate much longer. And that is because they haven't seen any sign that inflation is cooling their side or on their side. So they are holding their rates longer. So it is understandable if the CPI turns out to be higher than expected. But also note that actual, which is 3.5. So first of all, please let me be sure that you can see my. Let me be sure that you can see my screen. So if you can see my screen, send in a yes. All right, thank you. So, all right. So like I was saying, we do not have much on the table this week. We just have a few major impact news, dollar, which is going to be Friday's event. So that is what we are actually watching out for most Friday news. So besides that, nothing much. So it has been a slow and dull week market, apart from a few instruments that has actually moved. Even gold did not really move so much. It just ranged about certain price. So we don't have much on the table fundamentally. But today we had news on AUD. Yeah, like I said, it turned out positive. If you check the chart of AUD, notice the sharp movement to the upside and then the sudden decline. Now that decline is simply due to the fact that the actual is less than the previous. So remember that when the news drops, the initial reaction you see in the market is the comparison between the actual and the forecast. After the news has been released, the other move that you see in the market when traders are now comparing the actual and the previous. So you see the sharp movement up in the AUD. That was because the actual was greater than the forecast. And then shortly after that, we saw a decline. That's because the actual less than. So having said that, let's now move over to chart, see what we have in play. So I'll be starting off the analysis by looking at the dollar index. What I have right now is the chart, dollar index. All right, so let's now look at the higher time frame. First of all, so this is D1. I'm looking at the movement of the dollar index on a monthly basis. Now you can see the sharp decline in dollar for the 2 months. In the dollar on a downward move. So steadily the dollar has been going down, and that is very understandable because fundamentals that we have been seeing so far. So during the testimony by Powell, he clearly mentioned that right now they are ready to start cutting rates. So there's a tendency that by their next interest rate will be cut. And we know very well that interest rate is one of the major reasons, one of the major drivers of the currency market. So with that being said, the dollar declined massively. With this kind of decline, you don't be surprised if at the time they finally cut interest rates, might not see so much or so much decline. So what they are actually doing, they are looking for landing, soft landing. They prepare the investors' mind, they prepare people's mind, so that by the time the rate is actually cut, there might not be so much reaction anymore. It's a very good strategy. So, but at the interim, I still expect the dollar to continue its decline. So I would still expect the dollar to fall down to the low that was recorded in June last year, 2004. So this is it. So this level is the level from June. So what I'm expecting is a continuous decline at least to this particular level. But that might not be this month. That might be from next month. But like I said, it is the last week of the month. So there might not be any significant move in the market. We might not experience any move. So you might just see the market ranges up until the end of the month. And then from the new month, we start seeing movement. So I want to see the market, the dollar break below this before a reasonable retracement can occur. So you can see on a much higher time frame what we have. So this level is a very crucial level for the dollar, this particular level, which is where I'm anticipating that we might run down before we start experiencing a retracement. What that simply means is that currencies that are paired with the dollar should gain strength against the dollar at least for this week and first week of next month. So when you start considering strength in the dollar is when the dollar has fallen down to this area. Now this here is a weekly time frame. This is W1. And this is the level I am currently expecting the dollar to gain also start getting demand. So I anticipate that the dollar will start being bought up or being bought from a particular region. So with that being said, it means if we are trading Euro USD, we continue our bullish trend, we should buy Euro USD, buy Pound USD, Euro USD should be a buy, and gold should be a buy. These are the currencies that are mostly affected by the movement in US dollar. So that summarizes it all. So we are expecting further decline in dollar. Now let's look at Euro USD. So this is Euro USD on a 15-minute time frame. So this is where we are currently. So this is a very good setup for those of us that want to trade Euro USD. They have a very good setup. So you can see how the market has successfully retraced down to this particular level. So if I draw my Fib, so what I'm doing, I'm using my Fibonacci. I'm looking at this particular day. I want to believe you can see my So I'm drawing my fib from this low here and extending it to that high. So for that particular day, drawing my fib from low. So let me mark the levels I am actually drawing. So I have just drawn my fib from this low here. So I've marked the low with the green and all the way to this low to this high. I will be much more comfortable if the market retraces to around 61.8. So now look at the chart closely. Look at the chart very closely. You will notice that I've actually retraced exactly at 61.8%. So as a fan of the fib, I use the Fibonacci all the time for my entries. So we've retraced exactly to 61.8%. So what that tells you is that we are going to continue. So for those of us that are here on this particular class, you are free to buy the dollar. You are free to buy Euro USD. So you are free to engage Euro USD for a buy. Now, with this move, now look at this move up. I'm usually not comfortable with this kind of move. Usually, I will want to wait for a mild retracement to around this region and then before I buy. But for those that are aggressive, you are free to engage Euro USD because we've seen a very nice structure. We tried to break the structure to the downside, but it did not actually succeed. Also conclude that we are in a downtrend. We want to see this particular low. Now look at this low where my cursor is hovering. Once the market breaks below this low, then we can say, okay, we have seen a change in trend, which means we might be going down. But for now, there are no indications that we are going down. Remember also that the dollar index is suggesting that we have a continuation to the downside. So for that reason, I expect Euro USD to continue higher. And we have just seen a very good setup, which is the retracement to 61.8% of our Fibonacci. Fibonacci was drawn from this low here. Look at my cursor. It was drawn from this low all the way up to this high. So I'm expecting a retracement to at least or at most 1.8%, and that is exactly what happened. So for those of us that are here, this is 828, 820. It's a perfect time to go in on the Euro USD. Now, for the aggressive ones, you can jump in. Your stop loss just below this particular low. Or for those that might want to go in with a much higher lot size. So listen, you can trade with a much higher lot size. For instance, if you've been trading with 0.01, you can actually trade with 0.1 or even trade with 0.5, as long as you have a tight stop loss. What does it entail? What does it mean to have a tight stop loss? A tight stop loss simply means that you are looking for setups that gives you opportunity to enter the market at the best price and also at the same time at a very minimal risk. So for those of us that will want to try to enter trades with a high lot size, this is an opportunity for you. Now remember that in trading, 0.01 will not get you to where you want to be. You cannot succeed. You cannot make it from 0.01. Not possible. So when you trade with 0.01, usually we advocate 0.01 for beginners, for those that are starting off trading. Yes, it's very good to understand the market on 0.01. But don't forget that your major purpose of coming into this world of trading is to be able to pay your expenses. You have school fees to pay, you have house rent to pay, you have to feed, you have transport, you put on clothes. So you need money. We all need money. And we have a tool in front of us to help us make money, which is this market. But note that you cannot make that kind of money on 0.01. Now, for you to make it, for you to be able to meet up your daily needs, you would have to increase your lot size. It is not by many trades. You don't need so many trades. You just need to increase your lot size on a good setup. And what I mean by good setup, at this, for instance, look at what I have on the screen. There are some individuals who want to buy Euro USD from where it is currently. is very good for a buy. Like I said, you can buy from where it is currently. Now, if you're buying from this current price, it means that your stop loss will be placed at around 30 pips. 30 pips is below this shaded portion. So this shaded area, below it is about 30 pips, which might be much. But those that might want to go in with a larger lot size so that they can make more money on the small move or the big move, rather, you can wait for a retracement. That is the benefit of always waiting for a retracement in the market. The retracement affords you an good opportunity to enter the trades at the best price and also at the price where you can easily minimize or quickly minimize your risk. So imagine being able to enter the trade at this particular level. Look at this level I am at. If I can take my trade here, it means I can set my stop loss at 16 pips. With a 16 pip stop loss, I can increase my lot size. If before I was using okay, let me show you. If before I was using 0.01 on a 30 pip stop loss, and I wish to increase my lot size, then I can now place my lot size, my entry, wait for a retracement, place my entry within here, within this area, and then I will be having a 16 pip stop. Now, with a 16 pip stop loss, and on a norm, let's say on a normal day, you normally place your stop loss at 30 pips. But now you've seen an entry that gives you 16 pip stop loss. It means that instead of 0.01, you can now trade with 0.1 and still reach the same amount. So it is all about knowing good setups. So I can reach the same amount with you that is trading with 0.01. So let's say we both risk $10,000 on our trade. We are using 0.01. I can risk the same amount with you and increase my lot size. So I can even increase my lot size to a standard lot and still risk the same amount with an individual who is trading with 0.01. So that is the beauty of allowing the market to retrace. But once the market retraces, you have an opportunity to go in with a much reasonable lot size and at a very minimal risk. Sometimes it's still the same risk as you would on 0.01. So take note of what I have just said. You cannot get to where you want to be on 0.01, especially if you're trading current. For those that are trading indices and the rest, yes, 0.01 can give you something. But for currencies, there will be need for you to wrap up to increase your lot size so that at least this move that you catch in the market, something reasonable. All right, so that is for Euro USD. So I am not giving you any specific price for entry, but I have shown you where you should focus. But I say for those of us that are aggressive, you can take it from where we are currently. But if you want to enter at the best price with a very minimal risk, then you place your stop loss, wait for the market to retrace to around this region which I have marked. This area is the area of, we are looking at a region of around 1.1144 and 1.1400. So just within this zone. Allow the market to retrace within that zone before you take it. Now your stop loss is below this shaded portion. And why that shaded portion? If you draw your Fibonacci from this particular day. So if you go to August 22nd and draw your fib from the low of August 22nd to the high of August 22nd and extend your fib, you will notice that we have just hit 1.8. Now, your stop loss, anytime the market goes below your 69, this 79 rather. So this level I have marked in blue is our 79. So the level in blue is our 79. If the market breaks below this level, which is 79, let me give you a price at that. If the market breaks below 1.22, 1.11250, let's adjust it to 1.11250, then that means that we are no longer in a retracement. Once the market breaks below 1.11250, it means we are no longer retracing, but we are now beginning to reverse. Take note that there's a difference between retracement and reversal. For a retracement, the market should stay above our 79% of the Fibonacci. And for a reversal, market falls below that level. So if the market stays above that particular level, then you are still in an uptrend. You can continue buying. But for now, I would prefer to wait for mild retracements. Remember, we do not have any high impact news in the market or the way we love to. And that is why this week I am actually less active trading because there are no news. Strategy in trading largely depends on fundamentals. So I trade more than technical. So because of that, I am less active. Now let's look at pound USD. So on pound USD, we should see something similar. So pound USD has broken a lot of highs. It's actually expected because among the currencies, it is the pound that turns out to be one of the strongest currencies. We can see that the pound has actually risen up to where we will term a supply zone, an area where we should expect at least a retracement. With what we are experiencing in the dollar and the fundamentals surrounding the dollar, we may not see a retracement on the pound anytime soon. So we might just continue into this area of support, resistance rather. We might chop into this area and before we see. For the pound, I'm still expecting a continuation to the up. Although we have some minor impact news on the pound this week, and some, let me just quickly, okay. I'd love to show you a calendar, but it's not forex factored. But let's just proceed. So on the pound, I expect to see continuation to the upside. So if I drop down to D1, you can see we've been having consistent push up. So on an instrument like this, you would expect a kind of retracement to occur. Yes, but retracement will not just happen until there are sufficient reasons fundamentally to cause instruments to retrace. But for the pound, we don't see any fundamentals on the side of the dollar that could cause retracement on the British pound. And so for that reason, we might just want to wait and look for an opportunity to buy. One of the challenges with such a move is that it's usually difficult to buy when the market has gone this far, an area where we will be termed as an overbought. You can say the market, that is the pound USD, has gotten to about. So with that being said, I would want to see a kind of retracement, a very nice retracement on the pound before we can proceed. So where we are, so this is the push up, and then we have a retracement. So which means on the pound USD, I'm still very, very bullish on pound USD, extremely bullish on pound USD, even though I would have loved to see a much deeper retracement. The kind of retracement I'm looking for is this. I would want to see the market retrace to my 61.8 around this region. So I want to see this down to this point. So it got almost close to that point and then it left. Before we continue higher. Now this will largely may not happen this month because, like I said, the week is almost out. The month is over already. We might not see so much by way of movement in the market. Normal thing, especially because of the fact that we do not have any high impact slated for this. So we might not see so much. You draw your trend line on the British pound, so you can see how we have been pushing up steadily. So let me just quickly show you my trend line on the British pound. So you can see that we actually did break this trend line. So right. This blue line you're seeing, my trend line. We broke below the trend line. Now we are back above the trend line, which is a good sign, perfect sign. That's a very nice setup, telling you that we are still bullish. For us to break below, back into the trend line, that's a very wonderful sign that we are still bullish on USD. And this is, if you see, because the dollar is still experiencing weakness fundamentally and both technically. All right, so let me go through the comments. So I'm seeing some suggestions. Someone is suggesting pound CHF. Yes, pound CHF has been on my radar for quite some time. I traded it yesterday for a sell. So I think the selling is still ongoing. So I would still continue looking at opportunities to sell. So when you look at pound CHF, it has more prospect to the downside than to the upside. Although technically, fundamentally, so please, who is this that asked the question? This is for A1 Wisdom, A1. So Mr. Is it A1 Wisdom? You are the one that is asking for analysis of pound CHF. All right, so listen closely to this. Now, pound CHF technically is bearish, is go down, it's going down technically. Fundamentally, go up. So technically, it should go down. Fundamentally, it should go up because the fundamentals are supporting the pound more than the CHF. Now, why am I saying so? There was a sharp drop in CHF. So you see this move to the downside on CHF. This is pound CHF. This move to the downside. Some weeks ago, the Bank of Switzerland, their governor came out to say they had to purchase, they had to buy CHF because of the station in the Swiss franc. So the Swiss franc has been depreciating for a long time. How do we know that? Look at this move to the upside. This move to the upside means that the Swiss franc is depreciating. That is, this move on pound CHF is showing you that the Swiss franc is depreciating. Now, this move to the downside was not because of any fundamentals in Switzerland. It was because the Bank of Switzerland, that is their central bank, decided to intervene. So they intervene, and how do they intervene? They buy up more Swiss franc, just like what the CBN is doing by buying the Naira. So that's what they did. They came into the forex market and then they bought up. So in the world of forex trading, or the forex market, there are two banks that does that. The Swiss National Bank and the BOJ. The BOJ, that's the Bank of Japan. So the Bank of Japan intervenes from interval, or from time to time they intervene. And also the Swiss Bank also intervene. The Swiss National Bank also intervene. So these are the only two banks that have the habit of intervening into the market. And what we mean by intervention, that they decide to buy up their own currency. So they create an artificial demand for their currency, just so that the market will fearful. So when they create that demand, all those who were selling the currency will begin to pull out of their sell trade. And those who are hoping to buy will be afraid of buying. I mean, those who are hoping to sell will be afraid of selling the Swiss franc because they are afraid that the bank intervention will continue. So this was the first move by the bank, this movement to the downside, and then it recovered. And then we had another move. So this was their final purchase. So by the time we got to this point, it was obvious that they could no longer sustain the buying. So now, how do I know all this? The Switzerland National Bank governor came out to say, but in the media. So if you are following up the fundamentals, you will know about this. So he came out to openly mention in one of his statements that they had to intervene to save the Swiss franc. It's a good thing. It's also a bad thing. It has two sides. It's not bad. It's not good, but so because of that, fundamentally, the economy is not reinforced enough for the Swiss franc to be strong. The British pound is still very strong fundamentally. So if you look at the charts, that is why I said fundamentally, the charts should go up. The pound should appreciate against the Swiss franc. But technically speaking, because of this intervention, created some technical patterns that is pointing to the downside. I don't know if the point is if I'm making the point clear. So it's creating technical patterns that suggest that the pan CHF should still continue downward. But fundamentally, there are no reasons this down. So which do you think we have a higher part? So I'm asking the question now for those that are following up my discussion. Which of these do you think has more power? Is it the fundamentals or is it the technical? So drop your comments in the chat. If you think the fundamentals should be given more importance, drop your comment. If you think the technical should be given more importance, then drop your comment also. So drop your comment in the section if you have been following up what I have said. So because of that, like I mentioned, that the Swiss franc has been on my radar. In fact, this move down yesterday, I sold. Because for you to now continue selling, now, why did I have to sell? So please look at what I'm showing you so that you can get some lessons from me. So this is the reason why I sold yesterday. Now, the market created what we would normally term as resistance. No? So anytime the market creates this resistance, it is, by book theory, it is said that whenever you see resistance, support rather, whenever you see support, you should buy, and when you see support, you should. I want to tell you today that it is not in all cases. Sometimes, anytime you see a support, that is a good sign to sell. So yesterday, the market created this support. So I saw this support on the THF. So look at it created the first time. Look at the first touch. Just follow what I'm showing you on that. First touch, he left, came back again. The third touch, and came back again. So with this, you would have anticipated a continuation higher. But because I know that whenever the market has touched severally on a point like this, it will break through that point. Anytime you see the market has touched a particular level 4 times, in fact, 3 to 4 times, if you see 3 times, just don't buy from that level again. Be thinking of selling from that level. I mean, the support level. If you see a support level that the market has touched 3 times, don't buy from the level. Be looking for ways to sell through the level. The level will be broken through. So that was how I waited for the Swiss franc to appreciate. I needed a good price to sell. Remember that fundamentally, there's no reason to sell. So for me to sell, I needed it to be at a very good price that I can sell. And that is the push to the upside. And so from there, I was able to sell all the way down. Now, if you look at a much higher time frame, you see the same setup. This setup where the market has touched multiple times on the trend line also occurs on H4. So if I switch to H4 on a much higher time frame, you see that the same thing is happening on a much higher time frame. So which means this particular instrument has a tendency to continue lower if we are looking at the technicals. So look at this now. So another trend line. So I want to draw another trend line. And then you see how it has created multiple touches, that trend line. You can see this is the first, second, and now we are at the third point. So look at what I'm showing you. Yesterday, this was the one that was broken, which is this. So we now have this touch. Look at this first, second, and third. What is that suggesting? It's suggesting that we might likely break below it. For pan CHF, is still a sell. I will want to sell, although fundamentally I'm not supposed to sell, but I will sell it short term and be very quick to take your profit. So for A1 who asked the question, if you are selling pan CHF, then you should target taking profits at this particular level. So somewhere around here, look at this red line, or somewhere around this point, then you should take your profit. So for this past CHF, because of the technicals, even though, okay, so I'm getting multiple replies. Some persons are saying fundamentals, some persons are saying that. All right, so that's good. All right, fundamentals. So I think fundamentals have the day. More fundamentals, as more persons are saying fundamentals. All right. So fundamentals actually will supersede the technical. That's obvious. Fundamentals will supersede. But sometimes the technicals can play out, because of some reasons, the market can decide to play out on the technicals, just like we are experiencing in the case of anti-HF. Market is poised to play out the technicals. Now, why am I saying so? If this high, look at this high here, if this high has exceeded this particular high, if this instrument has exceeded this high, so if yesterday's move, picking at this particular high, then we would have said the technicals is in line with the fundamentals. So this is one of those situations where the technicals is out of line with the fundamentals. That is it. Most of the times, the technicals will be in line with fundamentals. What you will normally observe in the market is the technicals in line with fundamentals. That is why it looks like technicals is of more importance. So, but in this instance here now, if you want to trade this instrument, since we do not even have any major fundamental, either on PAN or CHF, and go in technically for technical business, and go in for a sell, and then be quick to come out of the trade. Once you are in profit, you break even. Once you take a sell and you are in profit, break even, then allow the market to move. If it keeps falling, fine. If it doesn't, then just. All right. So I think that answers that particular question. All right. So I have another person here who is suggesting that we look at Eurocard. So I will quickly go on Eurocard, and then we'll look at Eurocard. Then we'll now move to gold. So please be patient. So for those of us that are seeing other instruments like gold, pay attention to my analysis on these other instruments. You might get one or two things. In fact, remember that the money you make in the market is not about the instruments you trade. You trade anything and make money. So when I see most persons focus on gold, it doesn't have to be only and trade anything and make money. So if the analysis I'm giving on the other instruments makes sense to you, you can trade those instruments today. But sometimes, even on gold, you might not get a good setup. If you have just one instrument you are trading, the setup may not be right. Imagine if I'm trading a particular currency alone, you cannot get it every day. There are some days it will not give you something reasonable. Then you look at something else. But sometimes gold itself will not really present us with something favorable to trade. What do we do? Look at this. So just as the market is dynamic, the market flows like water, allow yourself to also be dynamic. Don't be rigid. So, but we will look at trade gold once in a while. I just started trading gold a few months back. I don't ever trade gold because of gold movements are strictly or mostly based on sentiments, not really fundamentals. You might think it's fundamentals that move, and not really. It is sentiment mostly. And so because of that, my pattern or my way of trading, I find it difficult to trade gold. But, I just started to learn how to trade gold. That does not mean that my analysis will not work on. Definitely it would. So let's now look at Euro CHF. So someone has requested for Eurocard. So quickly, I'll go to Eurocard. Please, can you change the mouse? Okay, let me quickly answer this person. Ade said yesterday news came as buy on the dollar, but my Euro USD keeps rising instead of dropping. Yes, I have explained that the dollar is fundamentally weak. All the data, all the information coming out of the dollar will not change anything. Why? Because the next move by the central bank is a rate cut. They are cutting interest rates. They are cutting their rate in the next meeting. So there's no news that will come out on the dollar this week and even next week that will change that movement or that will change that particular decision. The central bank governor, that is the Fed, that is Powell, came out to say that they are now ready to start cutting interest rates. The only difference is the market has anticipated a 50 basis point cut, that they will cut twice. But because of the data that have been coming out so far, some have been in favor. In fact, there's a mix. The data is actually mixed. And so because of that, expected that there might be just one rate cut. Okay. Now, that rate cut is already being factored in the sense that those who are trading and investing in the dollar, they will not start pulling out their money from the dollar next month. The rate cut is next month. The rate cut will likely be September. It is not September that they will start pulling out their money. When do you think they will start pulling out their money? If you know, please drop it in the comment section. When do you think they will start pulling out money? If there's a rate cut, September, and the Fed has also confirmed that there's a possibility of them cutting rates in September, which means those who are major investors in the market will start pulling out their money, dollar to other instruments. When will they start pulling? It in September or in October. Good. Now, immediately, they will start pulling now. So irrespective of the fundamentals that are coming out, we not change it. So I'm responding to the question. So for those of us that can see the comments in the section, I'm responding to the question by Ade, that he said that he bought, that the news on the dollar was positive, but Euro USD keeps going up. Yes, that is because it has already been factored in that the rate on the dollar will be cut. And if anytime there's a rate cut, the instrument will depreciate. So for a currency like the dollar that is seen as safe haven, it is not that September that the thing will begin to occur. The movement of fund or the movement of investment from the dollar to other currencies will begin now. Because we are not talking about 1 million naira or $1 million rather. This is billions of dollars, trillions of dollars. It's now they'll start moving that money. So they will now prefer to buy other riskier assets. Riskier assets are currencies like AUD, NZD, and so on and so forth. So that is why you see those currencies will appreciate. So there is no news that will come out this week that will change that. Any move you see in the dollar as a result of news this week is only going to be very momentary, very, very short news. It's not going to last. But guess what? If the news is bad for the dollar, you will see massive movement to the downside. But if the news is in accordance to the expectation is that they will cut rate and in fact, this is it. If the news is in line with the current sentiment on the dollar is that the value will drop. That's the current sentiment. Any news that is not in line with that sentiment, you may not see any much effect in the market. But if there's a news that comes out and is in line with that current sentiment, we see crazy movement to the downside. Remember, we have also looked at the dollar index and I've shown you some lows that the dollar needs to get to before it starts to retreat. They are looking for every opportunity to push the dollar to that part, to that side. So there's no news that you will see now, that might actually change what is going to happen in the market. So don't be alarmed when you see something happening. That is one of the reasons why it's good to always keep up with the fundamentals so that you have a clear picture of what is happening in the market. All right, so for the PAN CHF, if you have taken that trade on PAN CHF, at least you have made some profit. All right, so the next person is asking, please how can I stay updated with news from countries as regarding interest rate, countries buy, All right, so if you want to keep updated with the fundamentals, news, and so on and so forth, give you some websites that you will go to. There are a whole lot of them. I have about 12 websites I have to consult every morning. I go through these websites one after the other. I make sure I get the latest on what is happening before I even open. But you may not need to do it to that extent. So I'll just give you one or two that you can go through. And also, why you guys, why most of us are watching and listening to local news channels. So many of you want to tune into your radio station and listen to local news channel. I usually get the latest, what is happening in the market from Bloomberg. If you go to YouTube and type Bloomberg Live, so if you type Bloomberg Live on YouTube, you will see live channel where you can follow up with it. The only thing that is discussed on that channel from morning till night, from January to December, depends in the market, all the markets, currency market, commodities, stocks, and all of them. Analysis will be done. So most of this analysis, most of what we are even expecting, they will call top analysts from different banks to come and give their opinion. So when you listen to those channels, so every morning I tune into those channels, I just sit and I'm listening to them. Even while I'm doing other things, I'm listening to them. So before we end up the class, I'll drop some of those websites that you can go to and get updates on the latest when it comes to fundamentals. That is for those that are interested in the fundamentals. I'll type it before we round up the class. So a couple of them. So every morning, go there, read it. It requires reading. Fundamental analysis requires you to read. It's really not too much. It just requires you to look for information and then go through it. So I'm looking at Euro card. So someone suggested that we look at Euro card. So this Euro card. So for the Euro and the card, see clearly that on a monthly basis, we've been in an uptrend. We've been in an uptrend. Now, I can confidently tell you that fundamentally speaking, Euro is stronger than the card, fundamentally. And that is because the card, Canadian dollar, that is the Bank of Canada, is expected to still cut rate one more time. So their rate cut is going to occur whenever they have a rate meeting. But for the Euro would also cut, but even if they cut, their interest rate would still be higher than that of card. So there's what is called interest rate differential that will take place. Even if they cut, they are still going to higher. And fundamentally speaking, the data so far on the Euro has been positive. But all of this will largely depend on the CPI. I think there's CPI on Euro. So it will largely depend on that. So, but technically speaking, we can see the market has been in an uptrend for a couple of days now, or a month. So for the whole of last month and the part of this month, we've been in an uptrend. Also have at the back of your mind that most times, even though the card is weak, all right. So most times, the card is weak. Most times when the card is weak, you can suddenly see strength in the Canadian dollar. And the reason for sudden strength in the card is because of oil prices. Oil has a strong correlation with the Canadian dollar. That is because the highest export of the Canada is oil. That is the WTI. That is one of the reasons why from time to time you see sudden strength in Canadian dollar. Anytime you see strength in the Canadian dollar, go and check the prices of oil. Oil has appreciated. But besides this factor, fundamentally speaking, the euro should be stronger than the Canadian dollar. Now, if you look at on a technical level, similar strength in the euro when compared to the card. So, for this reason, this depreciation you see down there is valid. So you notice if I draw a trend line, let me quickly draw a trend line. If I draw a trend line from this beginning of this move all the way up here, you notice we just broken our trend line and we are actually going down. Yes. But I would not be tempted to sell. So if I'm trading Euro card, I will not want to sell. I would rather want to buy. So where will I be thinking of buying? I will want to buy from All right. To see where we have gotten to, although we've been here before and we've left, we are back to this same region. So you see where we are currently. We are at a very nice spot. So for the guy who asks about Canadian dollar or Euro card, so for Euro card, I will be looking at a buy. And this is how I will do it. I will buy from where we are currently. I'll be looking at buying from this current price. Where we are currently is a good opportunity to buy. And I will be taking note of keeping track on this other price. So look at this level. This level I have just marked. Let me put the price. Yes. So this level here is 1.49613. Now, if we break below that level, if we break below that price, then we will go down further. But so long as we are above that price, then we will push higher. So for Euro card, I will be buying. And if I'm to trade Euro card, buy from where we are currently. Now, for me to buy, let me not go too much. For me to buy, I will usually drop down to a lower time frame, like the M15. So look at what you have on M5. This is M5. Now, on the M5, I will be looking at for some patterns. One of the patterns I look at for is what you are currently seeing, which is W formation. So this is the W formation or double top, double bottom. So anytime you see a double bottom that has formed in your region or in your zone where you are anticipating to take a trade, that's a good sign that the market is actually poised to go higher. So on the lower time frame, what you are experiencing is a break of structure. The market is shifting. It has shifted to the point where it is now going to break above. So what you are looking at for now is you want to see the market break above this high. This high is the last high that created the last low. This is the low. This is a high. So now the market has created a low. Look at this. The market created this low. And then market has created another low. This is another low. Now, this second low is higher than the previous low. Take note that this low here is a low. This here is a low. And this other low is higher than this previous low. That is, we are beginning to break structure upside. Market is breaking structure. Now, for us to confirm that we are actually going higher, for us to confirm that we are actually going higher, I need to see the market break above this high. So once the market breaks above this high, I will wait for it to retrace back to this high, or I can confirm that we have broken structure. Diagram. From a lower time frame, we have narrowed down to a region where we want to buy. That is where we are. But for me to go in for a buy, I need certain confirmation. And this is exactly how I do it. I wait for the market to break structure upside on a lower time frame, not on a higher time frame. So I want to see the market break above this high. After the break above this high, I want to see a retracement down to this level or even lower. Now, the break should be an impulse move. An impulse move, something like this. Look at this candle. Yes, not stagger. It should not stagger. It should break above, something like this. You want to see momentum. You want to see signs that the market is poised to go higher before you jump into buy. So I think for these instruments, a good opportunity to buy, but you want to see confirmation. You can use whatever you know as confirmation. I personally normally will be using candlestick pattern that's printing at that particular price. All right, so so I think I want to believe that question has been answered. So let's quickly look at the last instrument here, which is gold. So I'll be looking at gold. All right, yes, I will give you the website for the fundamentals once we are rounding up this class. Thank you. So for those that ask questions and your question has been answered, or I have tried to answer your question, please give me the replies. Just let me know that it's clear. Or there are still some other things you want explanation to. Okay, so let's now quickly look at gold. Many of us are waiting for. Let's look at gold before we round up this class. So we have 5 minutes. So we're out of time. So our time is up. Our time is up. But let's quickly look. All right, so this is gold. Now on gold, you notice I have these levels, these lines on my chart. These are pivot points and support and resistance point prices. But let me remove them so that you don't get confused. So you can see that gold has gotten to an all-time high. So gold has got really, really far. Has gone way high up. And if you have been observing the movement in gold, you will notice that whenever gold breaks a high, usually retraces. Remember I said, from what I have observed so far, I don't see gold as I think gold is react more to sentiment than to fundamentals. Reaction in gold is more about sentiment because news can come out positively for the dollar. And if investors and traders assume that positive news to be negative for the dollar, or assume that the positive news will not have any effect on the dollar, we will see that gold will respond based on their sentiment, not on the sentiment. So, I mean, there's a news on the dollar. The news is positive for the dollar, but because traders and investors are seeing that positive news as not having so much impact fundamentally on the dollar, they decide not to buy the dollar. Gold will respond not to the fundamentals on the dollar, but to the sentiment of the traders on that dollar. That is why I always say that gold responds more to the sentiment. Now, I don't mean sentiment of retail traders. No, there are some major institutions that sentiment that gold responds to. And that is the reason why if you are trading gold, you are using just supply and demand. I mean, just support and resistance by do well trading gold. You are using just moving averages on gold, might also be able to very well. Largely relies on sentiment more than the fundamentals. That is why sometimes you see the dollar, news on dollar is positive, gold is decreasing. Or sometimes there's a news on the dollar that is positive, but because there is a war in the Middle East, because the crisis in the Middle East escalating, gold is going to appreciate and forget about dollar. So these are some of the things that you need to mind. And that is why trading gold sometimes can be very tricky. So if you look at it technically and fundamentally, things continue higher on gold. But because we are talking about sentiment, at this particular time, a lot of traders will be considering where gold is currently as an extreme overbought price. There's a tendency for us to see a replacement, irrespective of the fundamentals on the dollar. Fundamentals on the dollar completely negative, but that will not stop gold from going down. There is tension in the Middle East, which should push gold higher, but that should just cause gold to even retrace because traders perceive that the price is too high. So these are some of the challenges I would face trading gold, especially if you want. So from where we are technically on gold, expect to see lower prices. That is, we want to see the price decline because if you look at it closely, one, we've gotten to an extreme overbought. Now this is a high, yesterday's high. The market has failed to break above that particular high. If the market was interested in going higher, yes, it's actually interested in going higher, but we might see a mild retracement before we proceed higher. So currently we are declining. So currently we are going down. This movement to the downside, there might not be any fundamental reasons for this. There might not be any reasons anywhere for the gold to gold can just go down based on few traders or just news that the price is too high. they need to put down to buy at a much better price. So with that being said, I'm trading gold. I'll be super bullish on gold. Super bullish on gold. But because of the dynamics of gold, I would want to wait for it to kind of decline. Maybe retrace down to around this area. Now you agree with me that a movement from where we are currently all the way down here, that's massive. That's a massive move. That's a massive. So what you want to keep in mind is this: for you to change your bias to a sell, you want to see gold break below this level. Once gold breaks below this level, then there's a tendency we will go lower. Remember, this particular low, this is a low that created the last visible high on our chart. This is yesterday's high price. So this low here needs to be broken out or taken. So long as gold is trending within this range, what? High and this level. If gold is trending within this range, then we will go higher. If gold trends within this range, then we will go higher. So from where we are currently on gold, if I'm to take a position on gold, I would most likely buy. But for today, look at what is happening. Gold is already almost at this low, the low from yesterday. Look at yesterday's. So what do you think will happen? So we are going to take out this low. So if you take a sell trade on gold right now, I can guarantee you that in the next 1 hour, you make profit. So this gold now, this current price action, confirm sell. And don't ask questions. You can even test it on your demo. Just go in and place it. And you will notice that, you know why? Gold is going to break below this level. At this level, we have a touch here. We have the first touch, second touch, and the third touch. Definitely, for gold to even proceed higher, for this instrument to proceed higher, it must, mark my word, I said it must break this level. So gold must break below this level, or it even goes higher. If you're taking trade on gold, and sell from wherever, from where it is now, sell below this low. Let me zoom so that I can see clearly. I have 3 lows on the chart. I have this point, and this point. So let me mark them so that you can see. We have this point, and this point. So for us to get any movement higher, these levels would have to be broken. That is, this level is where people refer to as support. Persons will be buying from that level. But guess what? The more persons buy from these levels, more the market is poised to break through the level. So if you're taking this trade on and sell from, and make sure, endeavor to sell. So if you are even taking a sell, endeavor to sell from there all the way below this particular point, and sell all the way down here, and then you take your profit, even though long-term gold is super bullish. Right. Thank you very much, ladies and gentlemen. That's way past our time. So I'll be ending this session right here, right now. And if you still have questions, feel free to drop your questions. I'll be typing. I'll be sending in the websites that you can go to and get some information as to the fundamentals. So these are some of the websites I personally use. Very powerful websites. You can also go there and then keep up to date whatever is happening fundamentally. So these are some of the and then all right. So these are some of the websites: fxstreet.com, poundshelling.com, and then marktothemarkets.com. There are other ones, but for a start, for beginners, you can make do with these ones. So, ladies and gentlemen, I want to thank you once again. And then for those who may not know, my name is Don Gayo. That's my name. So, all right. Thank you. Now, for those that missed this section, you can go back to our YouTube page and get recorded version. All right. So, please, someone is asking for my phone. Okay, permit me. Let me just start. All right. So, this is my number. In case you have any challenge, you can reach out to me. You can send me WhatsApp. I'm active on WhatsApp. You can send me a WhatsApp message. If you have any issues, send me a message. All right. So, thank you very much, ladies and gentlemen. Yes, I said you can sell gold. Interim, you can sell gold from where it is and make sure you sell below the low. All right. So, have a nice day, guys.